Hims and Hers stock has just smashed Q4 earnings and the stock is up 47% in the last 24 hours. And as always, we're going to take a look at the earnings and see... Hold on, what? I think Hims and Hers at $3.11 is uninvestable. 13th of May 2022, Andy Pickering. What? Anyway, guys, here we go. Hims and Hers, they have just smashed their Q4 earnings. I'm going to take a look at what went on, and I've got to say these earnings were unbelievable. I would give them 11 out of 10. These are the best earnings I've seen from earnings season, and today, I've got to say, the stock deserves to be up this much, which is absolutely crazy to say, but yeah, great rally in the stock, and for me, pushes my portfolio up to all-time highs, which is absolutely amazing. This is why we do it for days like this. So any of you guys that have been buying Hims and Hers and bought Hims and Hers at $3, well done to you guys, because obviously you're sitting on a massive return right there. But as always, when these companies report earnings, just like DraftKings, I go through the earnings and I tell you guys what I like, what I don't like, and everything like that. So I hope you enjoyed the video. Hit that like button if you have been in Hims and Hers for the last 2 or 3 years, because any of you guys are having a fantastic day. And here we go. So yeah, first of all, good response on the share price. I think it's very well deserved. And also what it ties into is Sunday's video. I forgot I didn't do this on Monday. It was Sunday I did this video. Sunday's video, I talked about that this stock is probably going to make me a lot of money in the next 24 hours, or it's going to lose me a lot of money in 24 hours. It's going to be a volatile stock. But for me, lucky enough, it has worked out. The stock has gone up a lot, which is absolutely amazing. And I've got to say, with the opportunity of the fear in the market and potentially me having my portfolio moved a lot, it was crazy to see like the negative, all the bears and all the negative and the haters come out in the comment section of the last video. We'll talk about that in a few days' time. But yeah, there was a lot of negativity out there, and yeah, for all those guys, there you go. Hims and Hers Club up 100% once again. I think we're up about 115% on it right now, which is absolutely amazing. I thought that was quite funny after Sunday's video and seeing a few of the people going, we can come out again and give JKR a bit of hate in the comment section, and then this goes up 47% in 24 hours, and they go, no, I'm going to have to go back to my mum's basement. Can't come out yet. It's still crushing the market. So anyway, earnings, here we go. So EPS, positive 0.001, 1 cent, absolutely amazing. This was supposed to be negative 0.02. I said on the preview on Sunday, I said I hope Hims focus on profitability now. I know that the growth is what we've all been looking at, and it's been absolutely excellent, and I think it'll still be excellent, and we all like the growth, but I think there's a lot of people are still bearish because it loses money, and granted it was only losing small amounts of money, but that fact when you get that combination of you've got a profitable company and then you're growing absolutely rapid is a beautiful combination. And we've seen that with a lot of stocks in the last 12 months. And Hims and Hers is now added into that list, and that's why probably the shares are rallying today, because everyone's looking, yeah, the growth's really good, but they don't make money. Well, today, Hims and Hers just go, a year after we've come adjusted EBITDA profitable, a year later, we are now a profitable business, which is insane. We've got this company growing rapidly and it's profitable. Really, really good. I wanted them to do this. I thought this would crush anyone that's like negative on the stock still. And that's what's happening today, which is absolutely amazing. Net income, we did make it positive, up 1 million from last year, down 10 million. By the way, all the profitability metrics were just absolutely amazing in this earnings report. EBITDA, 20.6 million versus 15 million at the midpoint guided. Absolutely insane, B. I think on the Discord, which was an absolute party last night when Hims and Hers reported their earnings, can join through the link in the description, guys. Absolute party. I said that I think they'll do 18 million in EBITDA, 20.6 million. It was insane. That's the story for these numbers. They're just so insane. Gross margin, 83% versus 79% in 2022. Now, what's even more impressive is when we get onto some numbers over here, that they're still doing these gross margins. These gross margins are insane. 83%. I mean, this isn't really a normal kind of health business. It's kind of like a SaaS product. And that's why the gross margins are so insane. And if we start valuing this business like a SaaS business, it is massively undervalued still at these sort of levels, which is crazy to see. Free cash flow, 10 million versus a loss of 9 million last year. Once again, a great improvement there. And we did end up with 47.5% growth, which is very good. To have a profitable company that's growing at 47% is absolutely amazing. Q1 guidance, this was crazy. Revenue of 269 million. This is versus the expectations, which was 252 million. That's insane. You know, a 17 million hike up on Q1 guidance alone. Very good from a revenue point of view. So we talk about this, sacrifice a bit of growth for the profitability, which we've got. The profitable numbers are still great, but you still look at the revenue guidance. Like we said that I think Wall Street have the numbers a bit wrong for Hims and Hers. You know, they were expecting them to go down to like 20% growth this year. It's anything but that, and profitable ramping up as well. EBITDA, 24 million in Q1, which is obviously a no good improvement from 20 million this year. The full year guidance as well, 1.2 billion in revenue. It was expected to be 1.1 billion in revenue, and EBITDA of 120 million. Now, if you look at their guidance here of 24 million, if that stays stagnant and you look at 120 million, I think like last year they're going to hike that up. So I would expect 120 million to be higher than 120 million by the end of the year. I think we'll probably be more towards 130, 140 million. And that will be 10% EBITDA margins. Now, the crazy thing about this is that the guidance they've just given for full year 2024 of 1.2 billion in revenue and 10% EBITDA margins was the guidance they gave 15 months ago for 2025. So this here that they're going to do in 2024 is the numbers they said they were going to do in 2025. This company is a year ahead of expectations on a revenue and an EBITDA point of view. How crazy is that? The fact that they have 15 months ago, they set out these numbers for 2025 and they're going to do them in 2024, or the guidance is for them to do it in 2024. Insane, guys. Absolutely insane. Wholesale up 53%. The wholesale was the strongest numbers I think I've ever seen them do. 53% growth in wholesale. And the great thing about this is, like I said, the worry I have with wholesale is gross margins. Gross margins, get narrowed because of being a wholesale. However, as we see here, they're still holding up at 83%. And the great thing about this wholesale business is that that's distributing it through other outlets. So you go into like a Walgreens, for example, and you're seeing like with Hims and Hers in there. All that's doing is improving brand recognition. Like, oh yeah, with Hims and Hers, they're sold in Walgreens. Like that helps the brand massively. That's insane. This, honestly, guys, this could be even like, after all this and all this amazing hike up in the guidance and all these numbers, this could even be my favorite bit of the earnings report. The cash went from 46 million up to 96 million. This is now starting to churn off a lot of cash. Insane. We have a company with a stellar balance sheet. You look at the balance sheet, it's clean as anything. And now because they're generating profitability, that cash pile is really, really starting to ramp up. Really good. One of the other things as well is a lot of people say, oh, it's just a sales and marketing company. All they do is increase the sales and marketing and that increases the revenue. Wrong once again. There was a 40 million increase in the marketing, which translated to a 76 million increase in revenue. So they are getting more from the revenue than from the marketing, which is absolutely amazing. They also said that now, it's clear this company's getting to a point of scale as well. Like the costs they have to put in are not as much now, and they're able to scale without having to put those costs in. And that's what we've seen, that delivery of that revenue growth and profitability growth, which is really good. Now, I put here, maybe manage costs a bit better, but same again, they weren't that bad. When you look at a company that was growing 47.5% growth, and you look at the costs are pretty fair reflected. I was just trying to find out some negatives in here, which was very hard to find. And saying that as a percentage of revenue, the costs are actually down. So I put here, like, maybe they can manage the cost a little bit more, but even then, they're actually coming down as a percentage of revenue because they're reaching that point of scale. So that's not even really much of a negative. The stock-based compensation was up 17 million from 12 million. I guess that was an increase, which was still a lot better than Q3. But even then, that's me trying to pick a negative up. 17 million on a 3 billion company isn't that bad at all. And you got to consider, if the company are firing on all cylinders, and if management team, and if Andrew Dunham is there and he's absolutely smashing it, which he is doing, as a shareholder, do you not want them to be rewarded? Like, you know what? Hey, if you want a little bit of an increased pay, through stock-based compensation, yeah, you know what? If you're delivering these numbers, you can have that increase from 12 million to 17 million. You've created me a stock here that's up 115%. I'm fine with that. Do you not want the top management team to be paid like a top management team to stay there? So as a shareholder, I'm not. That was me trying to pick up negatives, and even then I was like, I'm fine with that if they're doing these results. They have now set out guidance of 20 to 30% in EBITDA in I believe it's 2027. At some point, I'm sure I heard it say 2030. But either way, the point that I wanted to make is that it's got to be 2030, because 2027 would be absolutely insane. But saying that, this is crazy, so I never know with hims and hers. But what you'll see here is obviously the expected next year 10%. What is going to be shown is the ramp up in profitability now. They've kind of reached that point in scale, and that scale is now showing the profitability, which I think was the key point that I wanted to put in here. That was on the investor letter that Andrew Dunham released. So if you're a shareholder and you haven't read the investor letter, go read it. It was really good. There was also some new information in there. Talked about like competition as well, which was really good, and seeing how much they're crushing the market. Overall, one thing that was on the conference call that I think it's worth pointing out is obviously the company is now coming very cash generative. The cash they're throwing off is absolutely amazing, and there was kind of like, what are you going to do with that? I was kind of hoping they would maybe mention a share buyback, just to kind of utilize or flatten out the SBC, the stock-based compensation. However, they didn't. What they said is they're going to do some M&A with it, which, to be fair, I'm quite happy with them doing M&A with it, because when you look at the business and how they have used M&A before, it's been quite successful. So I would probably trust them to use that cash to buy the right acquisition, to be fair. So yeah, overall, yeah, I'm fine with them using that choice. I think that we will see hims and hers probably make an acquisition in the next 12 months this year as well. So we'll keep an eye out and see if that does happen. But if they do make an acquisition this year, it probably won't close until 2025, which is probably worth pointing out anyway. So hey, at this rate, they might be able to buy T-Doc or GoodRx at this rate. Yeah, absolutely insane. So yeah, overall, I thought the number. I'm trying to pick out negatives here. I'm trying to pick negatives out here, and I can't really. Even then, I'm struggling. It was 11 out of 10's earnings report. It was the best earnings report I've seen in Q4. It was so impressive. And if you're a shareholder, I think you're absolutely having a cracking day today. I think you're celebrating a little bit after this earnings report, and it's good to see, because some of those guys, some of those guys have been here for 2-3 years now. Some of those guys were holding this in 2022, and we've seen them bring out fantastic earnings in 2022, and we weren't seeing that share price reflection. What is good to see now is that we're finally getting that share price reflection after these numbers anyway. So yeah, well done to hims and hers shareholders. You're having a great day, and well done to you. See you in a bit.